Welcome to the Ideal Investor Show. Join us on the journey to financial success. Let's go. Hello and welcome to another episode of the Ideal Investor Show. And today I want to touch on something that is recurring every year. And the question is, are we actually paying a lot of attention to it or not? And here's why. So let me tell you what the topic is. And that is today the understanding of the property tax assessment and the associated appeals process. So what's the deal? If you really think about it, the vast majority of jurisdictions in the country have a certain rhythm when their county tax assessor is rechecking the inventory of all the houses in the county. Some have that every 2 years, some have it every 3 years, some have it every 4 years. And what has now become relatively common is that the county tax assessor is actually hiring a company that goes out and tries to evaluate all the housing stock, so to speak, and see how it has changed. So what does that mean in reality? That means that they go and actually take the addresses for one neighborhood, and then they go into the records, which they have access through the county tax assessor, and see which properties have been sold within that neighborhood and what kind of properties are they. You know, like anything like studio, 3-bedroom, 2 baths, 4-bedroom, 2 baths, 5-bedroom, 3 baths, 2 duplex, triplex, fourplex, and so forth. So they categorize all the properties, and then they look what has sold. And then they look at the other houses around the properties that have sold and estimate what is the current market value for these houses. You could almost make it sound like it's a very similar process like an appraiser would do if you are applying for a mortgage in exactly that neighborhood. And they basically, that organization goes neighborhood by neighborhood by neighborhood and does that kind of comparative analysis. And then they look, what was last year's or 2 years ago assessment? And let's just take an example and say, okay, the last assessment for your property was $100,000, which is what the property tax is based on. And now they do the new assessment 2 years later, and based on the sales in the area, they estimate that the value of your property is now $130,000, which would mean that the value of your property increased by 30%. Now, you have probably a pretty good idea if their assessment is realistic. But what is also a factor that they don't, as the assessors don't really pay attention to, is these sales that they basically apply to say, well, is our property, the one that we own, similar to the one next door that they evaluated, is that they don't take the economic situation into consideration. So if that house that they compare yours to sold 2.5 years ago, when everybody was like super crazy, or 3 years ago to get into a house and totally overpaid, then that's the price. And it's not that the price is wrong, but that was the price before interest rates shot up, like at maybe end of 2021 or early 2022. Now we're in 2025. If that same house were to come on the market at like a 7 or 8% interest rate, it would not get that same price again. But it's being used to compare against yours. So what you're ultimately going to see is 2 different options. One is that the tax assessor is sending you as the owner the tax bill for the next year with the new assessment. Or the other option is, which also happens, is because you have your mortgage serviced by some company that you always make your mortgage payment to, and they pay through the escrow account for your insurance, for your property tax, and for the mortgage, then they get that notification. In either case, you either get it directly or you see it in your next mortgage statement that a new value for your house has been calculated. And so the other aspect of today's title is, what do you do if you believe that your house is not jumped from 100,000 to 130,000 like the assessor says, but maybe from 100,000 to 110,000. So there are again two steps. The first step is if you catch this change early enough, there is typically a period of time that is shown on your tax bill when you can basically go in and fill out a form where you are actually contesting the evaluation. And what that means is you're basically saying, I think you made a mistake. My house is not as valuable as you claim it is. And what I have done multiple times is they then basically say, okay, well, if you claim that, then we have to go and look for ourselves. And then they make an appointment with property management and they go out and evaluate your house, not based on the comparison of other houses or other previous sales, but your actual house. And in most cases, what I found is that they then agree, yes, our valuation is not accurate, and they adjust it. The other situation could be that you find out about this change and this increase after that appeals period has already expired. And what you can do is, if it's after that window of time, you can still file an appeal, but then it's basically up to the county to decide if they want to actually accept the appeal or not. So the long story short on that is that you want to constantly keep a good eye on the notifications you get from your mortgage or whatever comes in the mail related to your investment properties, and really look closely what is the newly evaluated value of your property. And if you have any doubts that the evaluated number is too high, which then also means your property tax is going up, then you want to appeal. And part of the reason you need to and want to appeal is because if you have a higher evaluation and your property taxes goes up, it is not assured that you can increase your rent just because the value by the assessor goes up. So if they say, okay, you have to pay $100 more per month in property tax, you don't know if you can increase your rent by $100 just to basically break even as you were before. That's why it's so important that the valuation that is actually on your documents is realistic for the current market, not for something that was maybe realistic a year or 2 or 3 ago. So that's it for today. I hope this was informative to you, and it's a really important topic because a lot of people, they see the payments, they see their escrow, they see what goes out, but they don't necessarily pay that much close attention, especially to the property tax and especially to the appeals process that is open to you, and you should take advantage of it. So be well and stay safe, and I talk to you tomorrow.